following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
And that rockin' theme music, which I do believe actually is the handiwork of one John Grigus. Not that he composed it, but he did select it, I believe, or pushed us in that direction. With that rocking theme music underway, that means it's time yet again for the old Option Block. My name is Mark Longo from the OptionsInsider.com, as well as the Options Insider Radio Network, and we're proud and excited here to be diving back in for yet another show here in the brand spanking new year, and a brand spanking new year of Option Blocks. A lot of fun stuff to talk about today, a lot of interesting things going on. And, of course, I am not alone on the program, not by a long shot. I am joined by a rotating rogues gallery, if you will. Starting off with a infrequent contributor to the show, but he's back again, holding down the Monday mic seat today. He is George Kachuk, coming on in, beaming on in from the main KYO HQ here in downtown Chicago. George, welcome back to the show.
Hi, Mark. Thanks. Glad to be here. I always love being on here with the option guys, and just always learn some new option strategies.
Don't let it intimidate you. You know, we like to talk underlying too on a regular basis. We're not all 1x2 risk reversal swaps.
Okay.
Except for Grigus, he loves those risk reversal swaps. All right. And speaking of Mr. Grigus, the man holding down the Options Express hot seat today is none other than Mr. G himself. Good old John Grigus, the major domo over at the trading desk at Options Express. Mr. G, I don't think we've have you been on the show since the new year? If not, Happy New Year to you, sir.
No, I actually did the year-end roundup.
That's right, you did the year-end roundup. That's right.
At the KYO world headquarters
the
there.
The KYO
Jefferson.
HQ, yes. A lovely place.
But yeah, this is the first one of the year, and yeah, that music got me in the mood. I'm ready to rock out into the first one for me for the 2012 season.
The start off of the 2012 season, I like it. The kickoff, or I guess second kickoff, because we have done one
too much
already.
Football over the weekend.
And listeners, we probably will be joined by one of the boys from the pit. Later on in the program, they need to sort out who's holding down the hosting chair today. But with the team mostly assembled, we're going to dive right into the trading block.
The Trading Block.
All right, and welcome to the Trading Block. This is, of course, the portion of the show where we discuss what's trading, what's moving the old markets today, and certainly wasn't a heck of a lot moving the old markets today. It was a general shrug of the shoulders for the most part. Most of the major indices closed up anywhere from 1/10 to 3/10 of a point. Starting off with the old S&P up nearly a whopping 3 handles to 1280. We have the Dow up nearly 3/10 of a point, or 32 handles, to 12,392. The NASDAQ, even during this tech-laden part of the year, not really doing a whole heck of a lot, up about 2.5 handles to 2676, and the good old VIX cash eking to the upside, up 0.44 to 21.07. So not a whole heck of a lot moving the broad indices today. And I was actually a little surprised to see the NASDAQ being the laggard there, given all the movement, not just the movement, but all the anticipation and the developments we've been seeing in the broad tech land. Of course, leading that discussion is none other than Apple, who actually closed down today. I didn't think it was possible again for Apple to close down, given what we've seen recently. But Apple set a new high again with
52-week high too, right?
Yeah, I think that's a new all-time high, isn't it? Or has it been?
Yeah, no, you're right.
I believe that's a new all-time high as well. So Apple, I know you boys over at KYO, we're getting a little lukewarm on Apple going into the end of Q4, but I'm guessing you're happy you held on to some of that Apple underlying these days, George.
I know the other guys, they're probably a little bit more liking it than me. I see it as wedging up. But, Apple's got this twofold story here. It's been the growth stock. It's been the leader. Tells you which way the market's going to go. And at the same time, you're saying its PE is so cheap. Why is the PE so cheap? So sort of the idea, is it over with for Apple? Well, at the same time, you got to think of all these fund managers. If they're value guys, they can buy Apple, and no one can blame them. No matter what happens with Apple, and they'll say, well, the PE is only going to be like 12 or 11 points, so we can buy Apple. And that's your growth fund managers maybe piling out of Apple, maybe taking their profits, and maybe the value guys are stepping up and propping it up. I just don't see the big volume moves on the upside. It's just sort of volumes kind of dwindling away and it kind of drifting higher. So to me, that's still a little worrisome, but who knows? Maybe I'm wrong. Maybe the value guys will win out.
All right, listeners, and we are joined in progress by Mr. Slinky from OptionPit.com, good old Mark Sebastian. And Mark, as you may have heard, we were just diving into our discussion of Apple. Apple, of course, set yet another all-time high today, closed up over the 421 handle, and a lot of upside these days for Apple. I know I think on the last show, your boy Andrew there was discussing the value of purchasing Apple vol these days. Have you guys been aggressive? Are you guys still aggressively scooping Apple vol?
Yep, we just bought some today. And we bought it in January ahead of earnings. So here's how we're probably going to play it. And this is something I actually wrote for the street today and traded today. So this is out there. We're what I like to call the Piggy Boy, the Piggy Boy fan bag, the Fanboy Piggyback.
Piggy Boy fan bag. That might be a new one for the record.
The Fanboy Piggyback. We're basically planning on jumping on. All we're going to do is ride the fanboys that are, running Apple up to probably 435. I think Apple has another. It got a nice pop, and now it's been moving another $1 or $2 a day. We're just going to ride these fanboys up to about 435, 436, and then let the Jan roll off, and then probably set up a short position on Monday morning before Apple announces, so that when Apple builds up such expectations, it cannot possibly live. Apple earnings are kind of like having sex for the first time. It's there's so much buildup, and then it's just completely disappointing, especially to the woman.
That's a little more insight into the personal life of Mark Sebastian than perhaps our listeners required at this juncture. But you guys are pretty. You guys,
are they going to cut that, or
no? Actually, I think we should leave that in. That was a juicy tidbit. But so you guys are pretty much picking up gamma then and looking to scalp here on the upside.
Yeah, that's all we're doing. And the nice thing is, and we've been using butterflies because what we like is that if Apple really doesn't move, come next week on Tuesday, Wednesday, Thursday, you know what? That 430 call that we're long, or that 425 we're call, will probably be holding about the same amount of value as what we initially paid for the butterfly. And so the unwind on something like that should be relatively cheap if Apple holds or creeps. But if Apple takes a nice little move, you're in great shape to make a pretty nice chunk of change. And so the payout, is really, we're risking about a loss of 30 to 40% of what we put in against probably making 300 to 400% against it. And we really, really like that trade a lot.
It's an interesting one. You mentioned using the butterflies to do that too. I know Andrew had suggested that as well. I know you guys are big fans of that. And on the last show, we actually dove into the butterflies a bit because Tim had said that a lot of his customers lately have been calling up with questions about how to do flies, and he was thinking it was a little bit. He's getting a lot of interesting questions about that, and people are confused about it. So I suggested, I think
send them to me.
Yeah, exactly. Well, I suggested, and Tusaw suggested, even though it sounds scary, I think sometimes when people come to us with questions about flies, we tend to push them in the direction of the iron fly, because even though it sounds scarier, it seems to be a little easier for some of the novices to wrap their heads around just those two spreads.
Well, yeah, I mean, an iron fly makes a lot of sense for at the money plays. And the way I put it is a butterfly is just a call spread where you're a bullish butterfly or a bearish butterfly is just a call spread or put spread where you're actually trying to predict where it goes and or trying to predict where it doesn't go. But yeah, I like the concept of an iron fly. The only issue with an iron fly is that if you're doing something that is directional, you want to make sure you're not buying an in-the-money call, or selling some of that in-the-money stuff can sometimes be kind of a pain in the butt, and there's nothing worse than putting on, let's say, a bearish butterfly and then having it go slightly against you and getting assigned on that call. So for at-the-money butterflies, I love the concept of using iron fly, but I actually think it makes sense to use the put fly if you're bearish and the call fly if you're bullish. The spreads are a little tighter, and I think it's easier to kind of see how they work against each other, but I would agree with you.
That's a good distinction, generally. I think the iron fly is probably more useful for something where the strategy is predicated around the at the money. I wouldn't really leap into iron flies if I'm doing some out of the money type of or size out of the money type of spread.
Although there is something interesting. One of the greatest gifts that all of these basic education firms have given us is the creation of the term the credit spread, because and this is actually something good for Apple traders to know. First off, anybody who uses the term credit spread clearly has no idea what options are. I say that. This is
your favorite. This is your favorite red herring here. The credit spread red herring.
What was that?
This is your favorite point of contention, the credit spread. I know it bothers you to no end.
But one of the things that we're actually noticing is that there's so much retail paper playing what we call the credit spread that it's actually thrown put call parity out of whack by several pennies. And so especially on the little box spread. So if there's not enough in the box spread where you can get away commission free. But where there is enough money on the box spread is, let's say I think Apple's going to rally. Well, rather than selling an out-of-the-money put spread, it actually is cheaper most of the time to buy an in-the-money call spread. And then, and so you get more credit, per se, by buying that in-the-money call spread. And then when you go to take off the spread, buy the put spread, or now buy the debit side of the spread on the put that's been so overly slammed by all these traders. And what you'll find is you can actually squeeze between a nickel, between 3 cents and 8 cents out of it, which doesn't sound a lot until you realize that trading in and out of a spread is four transactions. So if you're trading a buck a contract, you're actually, if you can save 4 cents on every trade you do, it's like trading commission free. So take all that commission and add it back into your account. How much would you have been up last year?
So you're legging into boxes then, essentially?
Well, no, I'm just using the disparity in price to pick how I want to get long or short something. So the point is, I'm not doing this with the intent of, I'm going to leg a box trade out of it. I'm doing it with the intent that the call spread's probably a cheaper way to get long than it is to sell the put spread. So I do the call spread, and then coming out of that call spread, it's usually cheaper to buy back the put spread. And so you end up with a box spread, and in that process, you save yourself a couple of pennies.
That's an interesting approach. I think maybe we could dive into that a little more on an upcoming show.
Maybe that belongs on Vol Views.
No, actually, that belongs here.
An Black question. But yeah, it's an interesting. You get enough people. Everybody out there always says, "Oh, you're not big enough to move a market." Well, an army, a curbillion ants standing on one spot, jumping up and down, could probably cause an earthquake. And we're starting to see that effect with quote-unquote credit spread traders. Market makers aren't stupid, and so they lean right out of the money put spreads a little cheaper than they do the call spread. You can actually get things done, and it's been one of the really effective things we've come up with at Option Bid.
Yeah, that's true. They're taking advantage of that retail fixation and institutional fixation on the downside on the put wing and the upside on the call wing. And
exactly,
you're right. They're not. They've been to the rodeo enough times to know how everyone's going to play it, and they faded accordingly. And you can, I guess, if you're nimble enough, you can pick up a nickel or two here or there.
Well, and that's where we get right back to the you're not big enough to move a market, and where that applies is. That is true. Individually, we're not big enough to move a market. But that only applies if it's just you doing the trade. If everybody in the world is doing a trade, you're big enough to move a market. I mean, Mark, when you're on the floor, how many times did some newsletter come out and you would just tool on these people as the orders
all the time, particularly in the SPX. That was a favorite thing. Some strike would light up, and all of a sudden here comes a 10 lot, then a 20 lot, then another 8 lot, and it was just all day long, thousands of contracts, because people just kept trickling in over time on some newsletter recommendation of some ridiculous 20% out of the money put, or whatever the case may be.
And they're still doing it. Every newsletter we get, new one or old one, is credit spreads.
Oh yeah, and I mean.
Yeah, I can't think of many people out there who are making their living recommending buying premium on a regular basis. I mean, I'm sure there are a few, but they're vastly outnumbered by everyone else saying sell credit spreads, sell puts, that sort of thing.
Yeah, and actually that's kind of where the option pit strategy letter kind of comes into play. Andrew and I work on it, and it's a combo of the net of the position is actually meant to be flat theta or even possibly short theta, and it's actually a great vol play against just about any of these kind of credit spread letters out there.
And and we also this is funny. Right after I promised George before the show that we wouldn't have a completely deep in the weeds options show, we dive right into the heart of the options stuff here in the trading blog. But this is actually great. But George, I don't want to exclude you completely, because we do have a lot of interesting stuff going on the underlying side of the fence. And I know we were talking about tech before. I know there's any particular names have caught your eye recently. I know there's a lot of rumors swirling around about Kodak, whether they are about to bite the big one or not. Of course, the widowmaker Netflix back to life. Ooh. Apparently up 50% since the beginning of December. So you've been watching or trading either of these, George?
No, actually, once someone gets so kind of beat up, it's pretty much off my radar screen. I try to look at things that are near their highs or moving with the market, even though the market's still a little bit suspect here. And, one of the names come up with is Nuance Communications. They make the speech recognition software. They've actually been had a lot of volume coming in a strong side. They've been kind of riding their 50-day moving average over the last few weeks, and then they kind of had a few pops here over the last few days. So I'm really liking that. And they're going to be at the CES show, and I think there's some anticipation coming out from that company. And basically today qualifies as a pretty good breakout.
So, Mark, it sounds like he likes the Vanessa Hudgens of stocks and not so much the Lindsay Lohan of stocks.
I'm not sure.
Is that the way you put it?
I'm not sure what to make of that comparison.
That's the way George always puts it. He goes, this is the Vanessa Hudgens of stocks. That's what he always says.
Well, when something gets beaten up, I'm just not interested in it. I just not, and I know for, when you guys do option trades, there's probably a lot of kind of good probabilities of events happening. But in terms of, if you're kind of looking at a long play and those stocks, they're just forgotten heroes, it's over with for them in my mind.
Nuance is a weird beast because they've been kind of alone in that voice recognition space for a long time. I had Dragon, naturally speaking, 10 years ago trying to run it on a ancient computer, and it wasn't exactly the smoothest experience, and they've since improved it. Of course, like you said, the stealth play on them is that they are the underpinning for a lot of what's been going into Siri lately, so that's kind of, I think, where a lot of the future goes for them. And it'd be interesting to see, I mean, given the success of Siri, if someone like Google or someone else doesn't come along to gobble them up and put their tech to work for them as a competitor.
Well, yeah, what's pretty interesting, I mean, these guys, they've bought 5 companies this year. They bought 25 firms over the last 5 years, and then they have some kind of flex keyboard that's used on Google's Android-based phones. But actually, 40% of their business comes from in the healthcare business for doctors, so they can just walk around, dictate, and not sit down and write stuff, even though they used to dictate but have transcriptioners. So they're kind of getting into a few different things.
That is an interesting one. So I think with that, I think we will close out the old trading block. We've had a lot of fun diving into the weeds of flies lately. Maybe we'll do that some more. And of course, legging into boxes now is a new one. That's an interesting one.
Yeah, you're welcome.
But I
hadn't been on in a while, and I feel bad about that. So I wanted to make sure I sent us down a combo of intellectual talk and silly buffoonery discussion.
Got to have a little bit of both. It wouldn't be an option block without a little either or a little bit of both in that case. And now we're going to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and that somewhat Bond-esque type theme means it's time once again for the old odd block, and this is the portion of the show where we peruse the interesting, the unusual, and perhaps the dubious or questionable options activity that's lighting up the tape today. As we discussed at the top of the show, there wasn't a heck of a lot really lighting up the tape today, except for one interesting development. And I know you boys over at OX like the Chinese names, John. So we threw this one in there for you. It's Perfect World Company Limited, ticker symbol PWRD. And this is the name that does a whopping 700 plus contracts a day. They did over.
What was the name of that company again?
Perfect World Company. Ticker symbol
Perfect World Company.
Yeah, ticker symbol PW Company Limited. Perfect World Company.
Owned by communists.
Perfect World Company Limited, exactly. And they closed.
Super exciting, the way the words they choose are just
super
not
happy
right.
fun time. Yes.
Yeah, it sounds like somebody put that name into a Chinese English translator, and that's what it came up with.
Yeah, it was build your American corporate name binder.
Exactly. What an awful name for a company.
We Delivery, but yes, they closed today at $8.81, down a whopping 27%, or $3.19, and this is on the heels of some interesting developments out in this one. This is China's largest online game developer, and we've been talking a lot about game developers on the show lately, so I guess this fits into that with that mold as well. We talked about Activision in the past. I know your buddy Andrew there has been in love with Take-Two for a while, so there's been a lot of game talk on the show, so you might as well change it up and go Chinese game developers, and online seems to be where a lot of that action is, so these guys should have been well poised for that. And yet at one point today they were the highs were down about 27% today. This is after some Chinese blog came out and said that they're being investigated by Chinese and U.S. regulators, and the shorts went to town on this one today, crushing it. They've since come out and on Bloomberg saying those reports are false, but the damage has been done. Perfect World crushed today, down 27%. What's interesting about this is that we didn't see a preponderance of one-sided options paper. We actually saw people playing it both ways, which I suppose lends some credence to the fact that this news was false and that the movement was a bit overdone. We saw people coming in and gobbling up calls and puts in the front month looking for a snap lower or a retracement to the upside. We saw the Jan 11s. That's where a lot of the activity was. Jan 11 puts. And picked up about 2,400 on the day on open interest of just 440 contracts. So this is pretty much all opening paper. The bulk of them picked up in a big block for about 58 cents. The Jan 9 and 10 puts were also lighting up the tape with about 2,200 and 1,700 respectively. going up there for about 43 cents and 54 cents, respectively, on each of those strikes. So a lot of interest there on the old put side of the fence. We also saw some really pessimistic guys coming in at the Jan 8 level, picking up about 700 of those today on a previous open interest of just 52 contracts. So a lot of people lining up on the bullish side of the tape, but not to be outdone. We also saw some optimists coming in, particularly on the Jan 10s. Over 5,000 of those went up today, with people picking them up for about an average of, is that right? 51 cents? Oh, yeah, they've come off quite a bit since then, obviously. So, yes, we're an average price of 51 cents. So these are looking pretty great right now. They closed 25 at 35. So a lot of bulls coming in, too. I'm thinking a lot of them are not legging into a reversal there, a conversion reversal, but there could be a few, given that 2,200 went up on the put side. But I'm guessing the bulk of those are actually openers on the bullish side as well. So we saw a lot of interesting two-sided paper in this name. And John, like I said, I know you guys at OX love these Chinese high flyers. Were you guys busy today with Perfect World?
No, but I'm sure I will be in 6 to 8 weeks when their new symbol is PWRD.PK and they're trading on the OTC market. Our exposure to the Chinese stocks that get listed by buying a shell company in the States to kind of get through the costs and the red tape to do it the old-fashioned way. But, I mean, our experience has been calling people that, they've halted trading and we're going through expiration. It hasn't been a good thing. I mean, there's so much vehicles out there in which to trade. When people start showing interest in these Chinese stocks, I try to just keep them out. But I mean, from what I see here, I know you have the bullish 1350 calls on the Jan $10 strike. But I mean, I think people are looking for this thing to continue to sell off.
Yeah, not a lot of there are actually some mixed emotion here coming in, some size call buyers. So maybe the people are thinking the initial beating is overdone if this rumor is indeed correct. So there you go, Mark. Another game maker for you guys to peruse over there at Option Pit. You can add it into your Take-Two/Activision portfolio.
Andrew's our individual equities guy. I am the major index and volatility guy, generally speaking. Although I do dabble a little bit here and there.
So you can dabble in the major game index. You can make your own.
The major game. That was actually my nickname in college. The major game index.
The MGX. Mm-hmm. Here comes MGX walking down the quad.
Not sure if you knew about that.
You have quite a few nicknames. I believe you had an interesting one.
I did.
You had an interesting one on Volviews last week. I believe you said you were the fudge factor.
Yes, the fudge factor, where fudge is not a factor.
And George, I bet you're regretting diving into Mike Kavanaugh's empty seat today, aren't you? Right about now.
No, it's all right. This is kind of fun. Hey, the funny thing about these Chinese companies, in 2009 through summer, they were so red hot. You can make some good money.
I remember.
They just flew. And now it's like if you run a screen for like a value screen, you get companies that come up with a PE of 1 and 2. And on the surface, like, the earnings look great and the sales look great, and they're all Chinese. It's like the world just says we're not buying any more Chinese companies. I don't know. It's really crazy.
Yeah, I'm not saying there was an opportunity in there. I'm saying, you never want to be the last one to the party. All that's left are the Lindsay Lohans, as Mark said, beat up.
All right, and with that lovely image in mind, we're going to close out the old odd block today and roll right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that second version of the rocking theme means it's time once again for the old Xpress Block, and this is, of course, the portion of the show where the boys from OX take the reins and I get to sip a nice beverage and relax. So, Mr. Grigus, take it away, sir.
Well, I was out last week, so my market knowledge is somewhat limited. But the calls that I have been seeing over the last couple of weeks are mainly focusing on year-end stuff, closing out worthless securities. I can't tell you how many times I had someone call up and tell me they wanted to claim their January expiration option as a worthless option in December so they could take the tax loss. As basic as buying and selling any security is, they could not understand that if there's no bid offered at a penny, how come somebody wouldn't want to buy it? So we got a lot of those questions. But the big news for 2011, as I'm sure everyone is aware, there's two certainties in this world. One is that I will continue to have losing trades or buy Netflix as it falls by 80%, in our taxes. And as we approach the tax season, what's new for 2011 is the fact that equities now have to report cost basis. So we're starting to see a lot of questions on that in that type of arena of, how do I do this? And what we've done on the website, which has been there since January 1st, but not many people have realized that or have needed to look, is a cost basis screen that we have directly on the website. This records all the acquisition dates and shares and purchase price. If you've done, say, 15 to 2,000 shares in 500 lot increments, you'll see each notation time-stamped for date, quantity, and purchase price. This has to be reported this year. If you go on to your Options Express account, go to the positions page, you'll see a link in there that says cost basis. You click on the plus sign in front of the position if you have different acquisition dates, and you'll see the details of that security. A lot of people have questions regarding, why don't I have a cost basis? Well, if you hadn't purchased it in 2011, you're not going to see any type of information there. If you've transferred an account in with purchases from 2011, you may not see any acquisition date or details on there as well. So those things are of things of note. I've also heard too that our government is somewhat behind, even though they pushed out the rules and made private businesses play catch up and change their websites and disseminate information to customers, that there's going to be some type of leeway on cost basis reporting because the IRS isn't set up to handle the additional information. That's pretty much how our government works.
That wouldn't surprise me in the least.
Well, I mean, yeah, I was reading a lot about some of the, you see those rules and law changes around January 1st. You see a couple, CNN articles, and there's some interesting ones in there. Like a lot of stuff expired in January 1st, transit, all this stuff. But they said, oh, don't worry, Congress will probably go in and throw a patch in sometime in November to retroactively, go backwards. That's kind of what they did here. We all got prepared at Options Express and every other broker dealer out there, and now they're saying, okay, it's December 31st. We're not quite set up, so we'll give you a window of 6 months to catch up or not report your cost basis. But a couple other things that mutual funds are not reportable. Options are not reportable. Mutual funds will be in 2012. And then I believe in 2013, we'll have to start reporting the cost basis for options. A lot of people, too, we get this question, which is on the surface is a good question, but if you think about it for a second, you're like, oh, that doesn't make any sense. A lot of people will say, okay, I'll just go in and sell my stocks the last trading day of 2011, and then on the opening day, I'll just go ahead and repurchase it, and I'll get to take any type of loss there, but I'll be back in the position. Well, the IRS has already figured that one out. It's called a wash sale, and a lot of people don't realize it's a 60-day window. It's 30 days after or 30 days before the sell. So take that into consideration that you haven't found a loophole. It's similar to the question I get when someone sees a credit spread for more than difference in the strike, and they think they figured out a strategy that no one else has figured out, so they're going to have a guaranteed winner. Well, wash sale also is well known by the IRS, and they will hit you for it. So we're getting a lot of tax questions. Our customer service department and our trading department, we will see a spike come mid-February through the end of April 15th, just regarding these types of tax questions, and we cannot give specific tax information. A lot of times, I'll see an account with $500,000 in there, and he's asking John G., the trade desk guy, some of these complicated tax questions. Go hire a tax attorney. That's the answer you're going to get from us. We'll tell you how to use the site, but for these complicated questions, go seek out H&R Block. I'm sure there's one popping up on every corner of the street at this time of year.
So you're not a CPA in your spare time, there, John?
No. I do like numbers, but I don't sit there and, this will probably be the last year I do my own taxes. It just became too complicated. The tax code is 4 inches thick, and it changes. And like I said, the government will do patches and retroactively change stuff. The PMI insurance is no longer available, to deduct from your income taxes. It just changes so often that you can't keep up with it. One of the benefits, we were talking about I think over at Know Your Options, the last show that we did about the SPX and the RUT, I believe, have the special tax 60/40 long-term, short-term advantages. The 1256 like the futures do. I mean, that was one of the big reasons when I started trading. I traded futures because if you're making money, you get a pretty big tax break. But I wasn't aware that the SPX until the SPX PMs came out. We were comparing the SPX PMs to the SPY that the SPX also fell under that 1256 rule that the IRS has for the 60/40 split. So I mean, these type of questions, we're just going to get bombarded with them until the end of the tax season is over. And then we'll also get these people that too. You can always tell when there's a tax deadline for previous tax years, because within a week and a half, we'll get a whole bunch of people that say, hey, I need help pulling all my 2009 1099s and all my activity through the IRS will give them a certain date that they have to do past returns by. They always fall in within the same time as April 15th for previous years. It's funny.
Well, speaking of listener questions, or just questions that make no sense, that's a perfect segue for what we have coming up here in the old listener mail segment.
Listener mail. Listeners write in.
Mail's in.
This is, of course, the mailbag where we dive into our listener questions for the show. And we've been remiss in opening the mailbag, so we wanted to get a few in this week. And one of them came in recently that was a bit of a head scratcher. So I thought I'd put it here on the show to see if anyone could make some sense of it, because I'm not sure why someone would want to know this or what the value of it could be. Maybe they were just using the wrong terminology. But it came in on our forum. It was posted under options margin, posted by a guy who goes by the handle Tianyu, Tianyu. I'm not sure how you pronounce it. Maybe it's Tia NYU. He writes, hello, everyone. Who knows how and where to get the historical margin data for the options? Thanks. And it goes T. Wang, he signed it. So this one I saw this and I was just like, why would someone?
Historical margin?
Yes, I'm thinking maybe he wrote the wrong file.
Maybe he meant volatility.
But I thought I'd throw it over to you boys at OX in case there was something I was missing about margin that would be interesting or worth tracking on a historical basis. Because
I mean, I think in my career here, I've probably heard 50,000 questions, and I've never ever had this one. You have to assume that he's talking about volatility. If maybe he's thinking,
maybe he wants to know what his margin has been. Maybe he wants to know what his margin has been over a period of time at OX. He wants to see what his margin was every day.
He wants to see what the margin rates are, and maybe he just doesn't know where to find that. I mean, but it's not like something that's going to vacillate on a day-to-day basis unless he's trading, Perfect World Limited or some of these other crazy Chinese names out there.
Yeah. Can I steer him to call the trading desk at Options Express with this question?
Yeah,
and specifically ask for Tim Navabi.
Call John Grigus at home. Make sure it's after the hours of 6 p.m. on his cell phone, and he will be happy to walk you through that. No, I think Mr. T. Wang, I think you maybe just have your wires your wires crossed there a little bit in terms of verbiage. I think he was just looking for historical volatility data.
Yeah, our margin rate, has been 6%, for 10 years. It recently went up to 8% with Schwab, but I mean that's on the site. We have the calculations on there how to figure out, out of the money or index put spreads or equity put spreads, but not spreads. I'm sorry, just outright puts in the calls. But I don't understand if that's really the correct question that he's asking.
That's why I had to throw this one in there, because it was just it was unique. And of course, if he's looking for historical vol data, there's a lot of sources for that. I mean, you can find some of that stuff on the brokerage site. You guys have it at OX. You can go look at the live vol stuff and search for things. You can go to other brokers. You can look at
volatility is pretty good.
Volatility has a lot of great screeners out. There's a lot of sources for that. Just search for historical volatility, historical option volatility. You can find it on Bloomberg. You can find it a lot of places. You might have to pay for it. As long as you're willing to pay for it, you can get it. You have a lot of good sources for that. All right, and that is going to do it for the mailbag this week. I promise we'll get into the mailbag again more on upcoming episodes. We've been a little lax on answering listener questions, and there are quite a few of them out there. Many of them much more, let's say, well thought out than some of these early ones here today. But these were just fun ones we had to bring up. And now we're going to roll right into Around the Block.
Around the Block.
All right, and those lovely sound of traffic and gridlock means it's time For Around the Block, this is the portion of the show where we dive into our trading screens and attempt to peer into the future of what the market has in store for us. And George, since you haven't had a chance to participate in a little bit, why don't we let you start first? And what are you looking at? What's catching your eye? What's on your screens for the coming few sessions here?
What's been doing really well and is coming up on our screens have been the biotech companies. Basically, it might have been all spurred on with the purchase of Pharmacet, a few weeks ago by Gilead. And then, of course, this morning, Bristol Myers was announced yesterday, was buying Inhibitex. But anyways, you have some of the other more established biotech stocks starting to do quite well. Stocks like Celgene, Biogen, IDEC, Salix Pharmaceuticals. And these are actually all companies who already have a proven track record of making money, have good sales, so that it's not like you're just waiting for an announcement.
Celgene was actually going to be the name of my retail store where I was going to sell jeans.
I like that. That's good. Celgene is an interesting story because it's basically been moving sideways for 2 to 3 years. It's just really done nothing, even though fundamentals still are great and so forth, and now they're starting to have a little bit of a pop, a lot of volume coming in on the upside over the last few sessions. So
don't let him disarm you, George, with his on-the-nose brand of humor.
I love it. It's great, So those are some. Jazz Pharmaceuticals, another one that's a stock that's had a huge run from about 80 cents to $40 over the last 2 years. Actually, now 3 years. Getting on 3 years. And it looked like it was kind of like going to be done for. And actually, they had a pretty good announcement last Thursday. And actually, last Wednesday, volume started coming in off its 50-day. Had a really nice move. So they're probably up about 25% from that time. And they were also a company that was just making really good money, but they were just sort of like a two-drug company at that time.
Jazz's two big things are that drug, and then they actually cure restless leg syndrome. And I hear they're working on something for jazz hands.
I have that problem quite a bit. I spontaneously break out into jazz hands on a regular basis.
Wouldn't it be hilarious if Jazz Pharmaceuticals had restless leg syndrome?
There's money in that.
Our prescription is dance it out.
Yeah. No, but seriously, their news has been that they've merged with a British pharmaceutical company. So now they got about 12 drugs in there that they're able to sell. So that's sort of the big news, and no one's really sure how much money that was going to bring in their bottom line. And I guess last Thursday's announcement kind of surprised the market. So that should be pretty good.
And George, I know a lot of the inquiries we've been hearing about on the site lately, and just seeing in the general media. And since you're an underlying guy, maybe we'll toss this to you as well. Everyone's kind of flipping the coin these days on the future of good old Kodak. Closed today at 40 cents. What's your opinion on this one? You think they're going the way of the dodo, or they're going to find some way to miraculously reform themselves?
Honestly, I don't know. I haven't looked at them. But when something gets that cheap, I mean, it's. Who knows? I mean,
might be. Kodak could be a really interesting buy for a kind of short squeeze once they declare bankruptcy, couldn't it?
So buy them after they declare bankruptcy?
No, buy them here, and then when they declare bankruptcy, and all the shorts pull out of it, and it pops over $1. Unwind.
I don't know if the day they declare bankruptcy, if you're going to see a massive surge to the upside.
Yeah, well, take a look at. Did you take a look at like AMR stock? AMR kind of did the same thing, like took a dive, and then once they, then had a pop back up of $1, and then went straight right back down. Anyway, just a thought.
Well, I don't know. In those bankruptcy proceedings, usually the shareholders, though, they're done.
Oh, they're wiped out. No. I'm not saying hold it. Just don't get me wrong, folks.
Mark Sebastian, buy EK with both hands.
Yeah. No, it's literally an intraday play. So you're planning on them essentially, getting like a dead cat bounce off of, shorts unwinding their short positions, bringing up the capital.
Yeah, that is interesting because a lot of people are saying some of the EK stuff could be overblown by just so much heavy short interest out there that these guys are just highlighting any negative news that could possibly be coming out on this stock, which you do hear sometimes when these names start floating around these levels. But interesting one. I just thought I'd get you to weigh in on that, George, before we close it up. And Mr. Sebastian, aside from gobbling up all the Kodak you can get your hands on, what else are you looking at out there in the old pit land?
I've just been, we had Alcoa come out today. It's up slightly. One of the things we've been really keeping an eye on is VIX. And the structure of the way VIX is trading relative to realized volatility. I think tomorrow we're going to see, with Alcoa up 3% after hours, I think the VIX is going to drop below 20 tomorrow or Wednesday. And, even then, it's going to be completely overpriced to where realized volatility has been, which has been closer to 10%. So our big thing has been, it is not paying to own a bunch of premium right now. Aside from that, earnings are coming up. And, if you're interested in learning more about the VIX, we have our VIX event coming up a week from Wednesday. It's when not to use the VIX as an indicator. You can check that out, optionpit.com/events.
Yes, and we made our jokes about that on the VolView shows last week, so I won't dive into that and how that could be a 3 to 5 day long webinar. You're going to condense it all into 45 minutes.
I know. Well, anytime you're on with Don, you have to make sure you. Anyway, yes, we had our fair share of jokes.
Yes, it's jokes. So we won't repeat them here today. But yes, listeners, by all means, surf on over to optionpit.com/events, and you can sign up for it there and check out all of the fun do's and don'ts regarding the VIX. And Mr. Grigus, what are you guys watching over in the land of OX aside from tax season?
We got retail sales on coming up this week. It's usually something that will move the market, especially with the holiday sales just behind us. Technically, the market looks like it's ready to break out, but I'm bullish here, which usually I'm a huge fade, so people should be selling. But the VIX up slightly today with the markets flat to higher. I always like looking at the 10-year note and what it's doing relative to the market, and the note has been rallying here over the last 4 days with the markets pretty much just going sideways. So I'm kind of with Sebastian. I think something's going to happen here, and I think he's right with the vol breaking lower past 20 into the high teens. And like I said, I'm bullish, so I'm thinking we have to start testing the upside. But we need to start moving, though. It seems like we've just been in this range for about a week and a half. So hopefully maybe retail sales will be the catalyst to get that going. Obviously, the good news from last Friday on the non-farm payroll numbers had literally no effect on the market. I think the Dow was down, maybe mixed that day flat, and the NASDAQ was higher. So we'll see what happens.
Yes, and it is Alcoa Day today, so that, of course, does kick off. We're back in the teeth of it again, which is good. We have something fun to talk about here on the old trading block and around the block, aside from the macro events that have been lighting up all of our tapes for the past few months. But that is going to do it for this episode of the Option Block. I want to thank all of my partners in crime here for joining me on the show today. Mr. Sebastian, I know you have your webinar coming up, but what about you boys over at KYO? I know you guys are revamping all your webinars. Anything interesting on the calendar coming up there, George?
Well, what we have going on now is I write a blog every week, and it's kind of pretty interesting. Basically, what I do is break down our general market outlook, and I go through a technical view of the market, and I also give a fundamental view of the market. So kind of like I draw some charts, I mark them up, why we think, where we think the market's, what it's doing. It's basically an interpretation of the market. And then we throw in a few stocks that we're looking at. And again, there we give the story on the stock, the fundamental view, the technical view. It's not really so much a buy, sell recommendation, but you can call us and we'll let you know what we're doing on that. So that's at our website, Know Your Options Inc., the blog.
Yeah. Oh, Mark, I wanted to throw out that my wife Lauren is going to be a featured writer for TheStreet.com on Friday. She's writing a piece on what retail stocks should be bought and sold for 2012.
Really?
Yep.
Well,
she does fashion. BigBlondeHair.com.
We'll have to. Our listeners will have to check that out. I didn't realize we were giving.
You'll have to pick that up on the Option Insider Network.
I didn't realize we were giving spousal plugs now, but why not?
Hey. We're not allowed to talk about spousal plugs here.
My wife cooks a mean chili, by the way. Let's just throw that out there. All right. And Mr. Grigus, what's your wife up to these days?
Yeah, I was going to say, my wife's got a couple of races coming up this month, but go to the what's her website? TeamStradali.com. There you go.
Oh, there you go. All right.
But upcoming at OX, I've mentioned the live events that we have coming up. We do have a manager from our trade desk actually going out to the Dallas one. Nelson will be out there, so if you've called the trade desk, you want to meet one of the brokers in person, or you have a bone to pick, go over there and meet some of the crew and take in the Dallas workshop this Friday, the 14th, and the 15th as well. And then we have some other upcoming events, Sacramento, January 21st, and the Minneapolis workshop in February on the 11th, and Indianapolis March 10th.
I was just going to say, all those folks north of the Mason-Dixon line get the shaft this time of year. But you got a few going on. You got some brave, hardy souls venturing to Minneapolis in February. In
February. Yeah, and something's going to happen with this weather because it can't stay 50 degrees through the whole winter.
Hey,
so we're going to get
Don't
nailed.
jinx it on us, sir. I'll take what we can get.
Like February. I was at the park on Friday.
Yeah, my kid's been playing in the park for the past 2 weeks. In January and December in Chicago. That's fantastic.
It's been insane, yeah.
You can't complain about that. All right, and with that weather report, that's going to do it for this episode of the Option Block. I want to thank, of course, all of you out there for downloading and streaming and subscribing to the show and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.